We are off to a new year with new expectations. We are looking forward to better things. What are some of the things we've left behind? How about uncertainty, anxiety, unpredictability? Not words we really like and we really want to carry over, right? We definitely want to have some better things happening. How about things like tax deferred growth, liquidity, use and control, guaranteed loan options, no loss provisions, collateral opportunities, safety, high contribution rooms? What about competitive returns? Are those some of the things that we'd like to have instead of what we've had before? How do you do that? We use a properly structured whole life policy. Hold on, Glenn. Hold on. I'm here talking about investments, and you're bringing up insurance. I don't want to buy more insurance. I have enough insurance. Well, let me ask you, are your current ways of doing things giving you things like liquidity, control, no loss provisions? What does that mean? Well, you're not participating in a down market. What if we have down markets and you need to access money? Are you going to pay tax on it? Are you going to be accessing it after it's dropped? So you're now redeeming and losing any possible growth you could have had. Is that exciting? I don't find that it is in the conversations that I've had. So we talk about additional benefits like higher contribution rooms. Well, most of the things we do use, especially if they're tax advantage or tax deferred, they do have an upper limit. Now, you can have higher limits based on what I'm talking about, but it's not just about having the higher limit, it's having the higher growth potential. If we remove the ability for this thing to have fluctuations below what we put in and just have years of increase, then that makes things more predictable, more controlled, and definitely gives us more flexibility. Now, we all love tax deferred growth. There's a couple of instruments in Canada that were invented because tax deferred growth is huge. That is something where most of our money as Canadians goes. But what's one of the problems with that? Have you ever tried to make a withdrawal from the famous RSP? If you haven't, you may not know what I'm talking about. But if you have, you're going to have a minimum overall sting of 25% on that money. But the likelihood is it could be closer to 50. After we talk about withholding tax, and then when that income gets added to your income for the current year in which you withdrew, you're doing this. Nobody wants to compound when things go wrong on that end. And that's what we find have happened. So for those who've gone through this, you know exactly what I'm talking about. And for those of us who haven't yet, best case scenario is once you retire and you hit 72, you're going to learn what that withdrawal is like. But in the meantime, is it possible that when you need those funds, they had a negative year as well? How does that impact your withdrawal and your access? Because typically your access is by doing withdrawals. What if you could put funds away in an instrument that gave you tax deferral, but you could access without withdrawing, so you have access to these funds without removing them from the instrument, so you not only get to use them as you need now, but you don't have the taxation issue? That's a huge savings. Remember, I said between 20 and 50%, depending on where you live and how much you're taking out and your income. What if you could have access to your money without any negative tax effects? Would that be worth knowing about? Would that be worth exploring? Well, I would definitely say so. What if not only you could have access to it, but think about this, access, no taxation, but you haven't withdrawn your money, so your actual money continues to grow. How much more effective could you be? Remember, we've saved on taxation because we're not going to have that issue to access, and the money is still growing in a tax-deferred vehicle. So now you can have access based on what you put away. Use that however you need to, whether that's to plug a hole or take advantage of another investment of some sort, and still have your funds continue to grow in a safe, predictable environment. Remember, I said no access to down markets. So where your actual money is, it grows predictably year over year over year without a negative year. Would that be of interest? Would you want to participate in that and learn how to have that peaceful, stress-free way of life? Using a properly structured whole life policy, you can become your own banker by using the infinite banking concept.